Germany has a reputation for high taxes. People hear that you have to pay 42% taxes and they freak out. But this is not the entire story. Trust me, the actual taxes you're going to pay on your income are much less. Surprisingly, you only pay 42% income tax when your salary is over 600,000 euros per year. So in this video, I'm going to give you a detailed explanation of the German tax system so that you don't get surprised when you get your first salary. Okay, so let me break down the German tax system with an example. Let's take Hans. Hans is 28 years old and he's a manager at a big German car company. And he earns 85,000 euros per year before taxes. Not too bad. Now that's his gross income, but very important, it's not the amount he actually pays taxes on, because there are deductions that reduce it first, like his insurance contributions and other allowances. And this reduced amount is what the tax office uses to figure out how much tax Hans owes. Now here's the interesting part. In Germany, not all of your taxable income is taxed at the same rate. For example, the first 12,096 euros of his income is completely tax-free. Zero taxes on that portion. And this amount is the basic tax-free allowance that changes every year. 12,096 euros is the amount in 2025, for example. After that, the income from 12,097 euros up to 68,481 euros is taxed at progressive rates. It starts at 14%, and as Hans earns more within this range, the rate slowly increases. And this might sound complicated, but don't worry, I'm going to explain this later in the video. So once we hit 68,481 euros, anything Hans earns beyond that is taxed at the top rate of 42%. And from this amount onwards, you have to pay 42% taxes. Now you might think, wow, Hans is paying 42% in taxes. But that's not true. His taxable income doesn't reach the bracket with the highest tax rate. And when you add it all up, his average tax rate, the percentage of his total income that goes to taxes, is just about 28%. And that's a lot lower than the 42% you might initially assume. And this is where it's really important to understand the difference between the marginal tax rate, which only applies to the last euro Hans earns, and the average tax rate, which tells you his total tax burden. So here is one thing about taxes in Germany that confuses many people: the progressive tax system. Basically, not every euro you earn is taxed at the same rate. Instead, the more you earn, the higher the rate gets for those additional euros. It's designed so that people with lower incomes pay less in taxes, and people with higher income contribute a bigger amount. But here is where it gets tricky. People often focus on the highest tax rate, like 42% or even 45%, and assume it's going to apply to their entire income. In reality, only the portion of your income that falls into the highest bracket is taxed at that rate. The rest of your income is taxed at lower rates depending on how much you earn. So for someone earning, let's say 75,000 euros per year, they're not paying 42% on the whole amount. They are only paying that rate on the portion of their income above the threshold for the highest bracket. So this will be the most important image you will see about the German tax system. Let me explain this to you in simple words. So in this graph, we are looking at two types of tax rates: the marginal tax rate, which is the blue line, and the average tax rate, the red line. And the marginal tax rate is the percentage of tax you pay on the next euro you earn. And the average tax rate is the overall percentage of your income that goes to taxes. So as you can see, at very low incomes up to around 12,000 euros, no taxes are paid. So both lines start at 0%. And as your income grows, the marginal tax rate increases quickly. It starts at 14%, jumps to 24 around 15,000 euros, and reaches 42% for incomes of 68,000 euros or more. And for very high incomes above 277,000 euros, the marginal tax rate tops out at 45%, which is often called the wealth tax, Reichensteuer. On the other hand, the average tax rate rises much more slowly. For example, at 50,000 euros, the average tax rate is around 25%, and at 500,000 euros, it's about 39%. And once you understand this, you realize that the actual tax burden, your average tax rate, is much lower than the highest rate people always talk about. Alright, so here's something that confuses a lot of people when they look at their paycheck in Germany: the social contributions. People often mistake them for taxes, but they're actually a bit different. So on top of income tax, Germany has a system where a portion of your salary automatically goes towards social insurance. And these are deductions, but they serve a specific purpose. For example, there is health insurance, and this covers all sorts of medical expenses like visits to the doctor, hospital stays, and even your medications. Then there is unemployment insurance, which kicks in if you lose your job and need financial support, while you're looking for work. And pension insurance is also a big one. This is what funds your retirement benefits when you're older. And finally, there's long-term care insurance, which helps cover the costs of care if you need assistance later in life. Now, when you add up all these contributions, they usually take about 20% of your gross salary. That's a big chunk, right? But here's the thing, unlike taxes, these contributions are tied directly to benefits you can actually use. It's not just money disappearing into the void. It's going towards your healthcare, your retirement, and even financial safety nets in tough times. Because of all these deductions, taxes plus social contributions, your net income ends up being about 60% of your gross salary. But when you think about the healthcare coverage and future benefits you're getting, it starts to make more sense. Now in Germany, it's a bit more balanced. For starters, there's a generous tax-free allowance, so a good chunk of your income isn't taxed at all. So you're probably curious how high Hans' net salary is going to be. So for this, we're going to use a gross net calculator that you can find on the internet. Yeah, we just have to fill in our data here. So let's say Hans earns 85,000 euros per year, and we are in the accounting year 2025. You can also choose a different year. And the tax category, we assume Hans is not married, he doesn't have any children, he's single, so he's in tax category 1. Church tax, we assume Hans is not in the church. If you're in a church, you can also say yes, but here it's no. Let's say Hans is in the state of Bavaria, it's Bayern, and Hans, I think he was 28 years old. Does Hans have children? We assume he doesn't. And when it comes to the health insurance stuff, here you can also choose a couple different options. We go with the basics, and the health insurance add-on, the rates have risen quite a bit in Germany, so at the moment the average is about 2.9%, but depending on your situation, you can also fill in a different amount here. So this is also the basic stuff, and we hit calculate. So we get a nice overview of all the deductions and the taxes. So we have 85,000 euros gross. And here we can see all the social charges, pension insurance, unemployment insurance, and so on. And we can also see that Hans only has to pay 17,920 euros in taxes. So that's not the 40-50% people are assuming. So what is going to amount to a big chunk is actually the social charges. So this gross salary is going to amount to 50,693 euros per year. That's going to be 4,224 euros per month. That's Hans' net salary after taxes, after the social contributions. Alright, if you want to get your taxes in Germany under control and maybe even save money in the process, here are a few tips. First off, I can recommend filing a tax return at the end of every year. Yes, even as an employee, even as a student, you can do this and get a couple hundred euros or 1,000 euros back. If you have a regular job or a student job, filing a tax return can get you a refund. And a lot of people skip this, but let me tell you, it's worth it. You can claim things like commuting costs or money you've spent on professional training, and these deductions can really add up. And also, please keep an eye on your monthly paycheck. Specifically, look at how much wage tax, and this is called Lohnsteuer in Germany. Look at how much is being taken out of your salary, and comparing this to your gross salary can give you a rough idea of what your average tax rate is. And also, please make sure you understand your deductions. Not everything taken out of your paycheck is a tax. Social contributions like those for healthcare and pensions might seem like a lot now, but they're also actually kind of investments in your future. Some people want the safety the system provides, and other people really dislike it and go to other countries, and that's absolutely okay. In the end, it really depends on your preferences. In my opinion, Germany is a country that allows people to build a stable and safe life. So the idea that most people are paying 42% income tax in Germany is really just a myth. If you want to know how to save more money in Germany, check out this video next. Love you and stay focused.